On the phone, Fundstrat managing partner and head of research, Tom Lee. He's out with a new note saying, and this is quite the headline, that a 25 basis point hike today is both bullish and bearish, and that stocks, they might rally anyway. Tom, quite the opinion here. You're known as a big-time bull here. So explain this. No matter which way we go with the Fed decision today, you're seeing a rally?
Well, Frank, I'd say that the probabilities are higher for a rally. And I think Steve made an important point, which is that even though the stock market's been kind of resilient, there's been a huge tightening of financial conditions in the credit world. You know, the best way to see it is the MOVE index, which is basically the bond VIX, is that it's still at 160. I mean, that's like a 50 VIX. And we know there was almost a black swan-like failure of many hedge funds last week in credit. And so the Fed, I think, has to be cognizant that if they do something that further tightens financial conditions, and it means that stocks actually fall, this banking crisis could fuel more panic. So I think that investors know this. They've been cautiously positioned, which is a point we've made. I think that the fact that bond VIX has told us financial conditions are super tight there. So I think whatever Fed action they do is not about how much they raise, but it's their desire for financial conditions to not get worse. And I think that's why stocks could actually rally today post-FOMC decision.
All right, Tom, let's just flesh out your note a little bit. You say in the note that many people on the street believe only oblivious investors are still in equities right now, but you say that equities could actually be a leading indicator. So what are they indicating? Give us a sense of what you believe they could be indicating right now.
Yeah, I think there's a lot of ways to look at it. Year-to-date, leadership has come from technology and FANG. You know, FANG is up 30% this year. Early in December, we said we thought FANG could rise 40% this year. That's a pretty big signal to us because, one, these are stocks that generally do well if the market believes interest rates are actually starting to decline, which is the case, or if we're avoiding a recession. It'd be tough to be long FANG if we're going to be tipping into a recession. And more importantly, FANG and tech were the first stocks to really fall out of the sky in 2022 as inflation was rearing its head. And now they're starting to show leadership. And you know, by the way, that's 40% of the stock market is really tech and FANG. I think that the inflation story has kind of legged lower. That's why Fed futures have broken. It's not just the credit is tightening and that's going to slow inflation. I think the inflation psychology is broken. There's not stories now of inflation in the media, and then I think that means fewer people are going to be asking for raises. And, you know, in the venture world, they were probably 30% of all new job creation. I mean, that's slowed down for now. So I think even the Fed's going to get some cover from weaker job creation. So I think that's a real story saying is that structurally the market bottomed. By the way, this was the pattern in 2008. You know, tech began to lead as early as November 2008, and that signaled that the internal bottom was in.